want you to think about this for a second. Some companies, you have to wait 6 months to a year before you're even able to invest in whatever that they're offering or whatever matching that they'll be offering. This video, we're going to talk about SCHD, the Schwab US Dividend Equity ETF, which is one of my favorite ETFs. I do have other things in my portfolio. I want to share with you SCHD specifically in this video, and it is one of the dopest ETFs on the market, in my opinion, and it has the ability to make you extremely wealthy if you stay in it long term. Let's talk about SCHD. All right, so let's talk about SCHD, one of my favorite ETFs in the marketplace today. Now, when you look at it, it's currently trading at $27.40, the Schwab US Dividend Equity ETF, and my average cost into it is about $28.31. I currently have only 17 shares. Only 17 shares, because I never want my mind to be fixated on the number as if we've arrived. I only have 17 shares, and I plan to have a lot of shares in SCHD, okay? One of the things that I want you to see here, this is something that I'm doing in real time. This is not something that I'm talking about that I'm going to do. Okay, this is something that is being done in real time. I am building this right now in one of my Roth IRAs, and it does feel like a test account, even though I know that it is set up in such a way to be profitable in the future because of the dividends. But I only have 17 shares right now. Okay, so the current market value for this portfolio right now in SCHD is only $476.88. You know, once it gets to 1,000, I'm going to say only 1,000. Once it gets to 15,000, I'm going to say the same thing, because I want my mind to be conditioned that this number is, although it is a number that can be high to some. Now, if you're at zero right now, okay, it may not necessarily mean anything, right? You're like, oh, well, I'm at zero. I don't know if I should invest. I hear people lose money. I heard it's gambling. You know, all those things to me are distractions for things that are actually happening in real time and what people are really benefiting from while you're sitting on the sidelines. Now, you know, investing may not be for everyone, but if everyone can earn dividends through investing, then wouldn't you want that? So essentially, it's just you're putting money in, and over time, the company gives you a kickback, which is the dividend, and that dividend can be reinvested back into whatever the share or fund that you're in, and then you can snowball it and build it bigger. To me, that's something that I'm willing to do, you know, to get the benefits. You know, if I'm going to be rich, I'm going to be rich with this, and of course some other things, but this is easy to do. And the other thing too I want to talk about here is one of the things, you know, growing up, and I grew up in Brooklyn, New York. I had to take English as a second language, and I struggle with understanding certain concepts and ideas, and getting to a place where over time I started understanding the language better. And even though my mom was a banker, I didn't start thinking about investing until years later, or even taking it seriously. Because I remember there was a bank not too far from us where we used to live in Brooklyn. At the corner, it was Manufacturers Hanover Bank, then it became Chemical, and then from there it became JP Morgan. And although my mom was a banker, and I know she was an investor because we learned that later, it was just one that world didn't really make sense to me. But this world has been in existence for an extended period of time, and once you get around certain circles, they talk about different things, right? And I think that's really powerful. So if you're not in a circle right now that's talking about investing or whatever, as it relates to, you know, cryptocurrency, that people who are actually winning in cryptocurrency and people who are actually winning in investing, just because you're not surrounded by individuals who have won in those areas, that doesn't mean that people aren't winning in those areas, right? And just little things like that. So 476.88, right? And right now I'm green. So even if I was in green, even if it was red today, or depending on the actual week, I would consider to buy the dip, which I did on the 19th, right? 19th, I bought 2 extra shares because it was on sale. So red means sale to me. Okay, so let's go down. Just want to show you a couple of things. December 27, 2024, there's going to be a $30 trade happening automatically, right? And my trades happen every single Friday like clockwork. So another thing that I want to mention here is discipline. So it doesn't matter what you use or what platform you use. I use Robinhood. I'm gonna have my link in the description below, and it gives you a free stock to get started. And you could check out SCHD there, or even, you know, SCHG, which I like, which I'm not gonna talk about in this video. But those two I like a lot. Okay, so discipline is extremely important in investing, because when you're looking at something that you're going to do long term, think about the things that you currently do right now that you do without fail. No one has to tell you to do them, you automatically do them. And if you take that same mindset, if you're not on the market yet, and you apply that to investing, especially if it's good, even if you consider something like the S&P 500, which wins every year for mostly everybody, right? You never hear that the S&P 500, you know, does extremely bad for anybody. If you have that in your portfolio, and let's say you have SCHD in your portfolio, and maybe like VOO, which is, you know, another one that people talk about, or SPLG, which is another one people talk about, like all of these are potential wins if you structure it properly. Of course, it's not financial advice. This is what I'm doing. This is what I'm doing. Okay. So let's keep going. Okay. $30 every Friday. Every Friday, $30 for SCHD, $30 every Friday for SCHG, which I'll talk about in another video. And if you look at this right here, it tells you SCHD tracks a market cap weight index of 100 dividend paying US equities. So about 103 companies that pay dividends. And what I like about it, like if you look at the actual document on Charles Schwab about SCHD, when a company doesn't perform well, it takes that company out and it puts another company that's performing well in, so that fund is automatically getting adjusted properly so it stays well within what it's saying here, okay? 100 dividend paying US equities, and if those companies are performing well, they stay in this ETF. If they're not performing well, they get replaced with another company that is doing well. Okay, so it's a large value, about 103 holdings. Inception date is 2011, so this is not something new. Okay, so just think about where you were in 2011 if you weren't investing, or you were considering investing around that time, and you still have time right now. Well, you don't have time. We don't have time. We're in time. Okay, so when it comes to this right here, one of the driving factors for me is to make sure that whether is this profile in Robinhood or any other accounts that I have, the idea is to leave something for the next generation. Like beneficiaries has already been assigned to this account, and any other accounts that I have, because I want to make sure that I did something for the next generation in my family, whoever that may be, that there is something there. And even if I don't do anything else in this account, it'll still yield dividends to a point where they can benefit from it. And that's the beauty of that. Okay. So what's in this fund? Let's talk about that. So you have financial services, healthcare, consumer defensive, energy, industrials, consumer cyclical, technology, communication services, basic materials, and utilities. Okay, so you have 90% here, 15 here, 13 here, 12 here, 11% here, 11% there, 10% to technology, 4% communication services, basic materials 1%, and then you have utilities 0.03%. Now, who are these companies? Because that's extremely important too. Whether you're investing in an ETF that is not this one, or any other ETFs that are large growth or mid cap or what have you, the companies that are in there that are important, which is why I really like these basket of goods type of thing. It's not just one company. So if one company does bad and you only have that one stock, then the company does bad. But if it's a bundle of companies and it's a percentage of those companies within that particular fund, then you don't necessarily have to worry about one company going bad because you have other companies in there that will perform, okay, which is really good. So Cisco Systems, BlackRock, Bristol Myers, Home Depot, Chevron, Verizon, Pfizer, Altria, Texas Instruments, and UPS. Really, really good companies. Again, I'm building this in my Roth IRA. And with the Roth IRA, you pay taxes going in, it's tax-free coming out, right? So if it's a dividend and it's tax-free coming out, and you have a lot of these shares and they've compounded over time and the account gets really, really big, just imagine like the potential of that, right? And if you decide to add this ETF that gives you dividends with some other ETFs that give you dividends in a Roth IRA, by way of an example, okay? And you add maybe a large growth or maybe some semiconductor stuff in there, or maybe some rate ETFs in there. Like, you can really have fun while you're building your wealth for you and your family. I think it's really, really dope. Okay. Price earnings ratio 1735. I usually look at the number to make sure the number is positive. The price earnings ratio is essentially like a report card, kind of thing. So to me, if the number is positive, I pay close attention to not only that, but how it's performed over the years. So one of the things I want to scroll back up to, so if you look at it right now, 2740, if I do max, this is the current trajectory for that word sometime escapes me. Okay, this is the current trajectory for Schwab US Dividend Equity ETF. This is the max on it. If you do year to date, okay, you have 8.836% year to date. Okay, so I want to scroll back down to where we were down here. 52-week high 2972. High today, 2741. AUM, assets under management, that's 63.9 billion, okay, with a B. Okay, so you have that. The 30-day yield is 3.5. So you have that. And then you also have right here expense ratio. So expense ratio, you want that number to be extremely low, especially if you do not have anyone. So because this is managed for you, the lower the expenses. So this right here is the more you make, the more you keep, right? So you don't want this number to be extremely high, because the higher the portfolio gets, if this number is like 1% or 1.5 or 1.8, that is extremely high in my opinion. So you want this number to be as low as possible, 0.04, 0.06, etc., etc. So you want this number to be extremely low. And the lower the better. That means when they take out for the expenses, because the ratio is so low, it's not going to really dip into the amount of money that you built in the actual Roth IRA or the traditional IRA, which you pay taxes when you take out of that. But with the Roth, you only pay taxes going in, but no taxes coming out. Okay. And this particular fund right here, 6 hours ago, there was $30 that was added for the trading for this fund. And if you see here, Roth IRA on December 18th, 2 shares were added at $55. Okay, so I'm going to tell you what happened there. So there was a dip on the 19th of the, give or take the 19th of December, or 18th and 19th of December, around that time. And I was looking at it. I'm like, you know what? This is like 2705 or 2692 or whatever it was at, right? Right now it's at 2739. So it was like low 27s, high 26s, 2692. I'm like, I can buy 2 shares right now. Okay. Whatever I was going to eat for that week, whether it was like, pizza or Chinese or just, random foods, to order. I'm not going to do that this week. I'm going to buy 2 additional shares, because I know that over time, that's going to pay me way more than me considering the pizza or the next hoodie or the extra pairs of sneakers and stuff like that. So really, investing, it really has you thinking about where you should be putting, the money that you're making, whether it's through rental property or a YouTube video or whatever content that you're making online, and you're taking that money and you're investing it into, a particular ETF or stock or index funds, mutual funds, or what have you. It really puts you in a place to think about things a little bit differently as you're building these portfolios for you and your family. Okay, so discipline is extremely important. Discipline is extremely important when you're doing this. And one of the things that I wanted to do as well is not only just leaving this as something that's going to be a legacy, for the next generation. I'm also currently right now writing a book about investing for my younger self. Of course, it's going to be available to the public, but for my younger self, what if I had this information growing up? What would that mean, for me right now? So I'm going to write to my 20-year-old self and say, hey, this is easy. So really, really take advantage of it. So that's really happening right now in real time. But that's all I wanted to share here. SCHD is a powerful, powerful ETF. I definitely am going to continue to add it to my portfolio. Right now, I only have 17 shares. And maybe the next update, in the near future, I'll let you know how much more I've gotten of SCHD. And if you're looking to invest, and one of the things I wanted to add here as well is sometimes, by way of, I guess, additional alpha, if you want to call it that, some companies wait to even have you being able to invest in their, whatever fund that they're going to offer you, that you have to wait. Once you think about this for a second, some companies you have to wait 6 months to a year before you're even able to invest in whatever that they're offering or whatever matching that they'll be offering. You have to wait a whole year to do that. But with apps like Robinhood and other apps on the market, you can start investing right now. You could create a 401k right now. You can do a Roth right now. I'm going to have the link in the description below. Thanks for watching this video, and until next time, take care.